Copper just hit the 96th percentile, and copper at this level is a leading indicator of global industrial demand. Something is breaking beneath the surface and the data confirms it. Right now, the S&P 500 is at 7,405.7, the 94th percentile for the past year. Historically, the S&P at this level has historically marked a regime inflection. The volatility expert says, the VIX term structure is warning of a volatility event. The data says VIX rose 39.7% today, moving against the bearish consensus. In the next few minutes, I will show you who the data says is right and what it means for your money this month. The scoreboard just changed. A scoreboard flip means the numbers shifted. Pay attention to what moved and why. The commodity analyst's commodity supercycle call is paying off. Oil at $89.2 and trending their direction. 171-day streak, score 1 for the dollar analyst. Dollar milkshake higher. The dollar index agrees at 99.8. 4 days running, McElroy is waiting on confirmation. The narrative holds, but the data has not validated it yet. 170-day streak. Too early to call Hartman right or wrong. The thesis is building but not confirmed. 164-day streak, Gammon just moved from right to wrong. Gammon's call is not working, for now. Yield curve moving against the bearish thesis, up 7.9%. Snyder just moved from right to wrong. Snyder's call is not working, for now. Yield curve, moving against the bearish thesis, up 7.9%. The volatility expert just moved from right to wrong. The volatility expert's call is not working, for now. VIX, moving against the bearish thesis, up 39.7%. Score today, 2 right, 2 early, 3 wrong. A scoreboard flip means the numbers shifted. Pay attention to what moved and why. Today's big question, is a volatility event coming, or is the VIX lying? The volatility expert says the VIX term structure is warning of a volatility event. That is the thesis driving the debate today. It sounds right on the podcast, and it is a clean narrative. But here's the problem. VIX rose 39.7% today, moving against the bearish consensus. If the data is right and the speaker is wrong, positioning changes fast. Both VIX and the MOVE index are rising together. When multiple signals confirm the same direction, the move tends to accelerate. VIX at 21.5, 66th percentile, up 39.7% today. The MOVE index at 77, 54th percentile, up 2.4% today. Bottom line, the data is pushing back against the volatility expert. Until the signals confirm, the thesis is early. If VIX breaks above 35, that confirms the volatility expansion thesis. Right now it is at 21.5. If the MOVE index drops below 100 while VIX stays elevated, it is equity-specific risk, not systemic. VIX at 21.5 will track it daily on the scoreboard. The MOVE index at 77 will track it daily on the scoreboard. None of the 7 are talking about this next signal, and they should be. 2-year yield just surged 3% to 4.17%. A move this size demands attention. Historically, the 2-year at this level reflects where the market thinks the Fed goes next. None of the 7 are talking about this. Keep it on your radar. Phase 1 is the good times, but good times do not last forever. Here is how close we are to the edge. We are 76 basis points away from Phase 2, the phase where credit breaks and volatility spikes. There is no acceleration in credit stress yet. But we are watching the pace, not just the level. The trigger, investment grade spread, crossing 150 basis points. Currently at 74 basis points. Pace is flat or improving. No urgency right now. Phase 1 means risk on is working. Equities, commodities, and real estate all benefit from loose conditions. Enjoy it while it lasts. For context, the last time credit stress built like this, credit spreads blew out and high-yield bonds saw drawdowns of 15%. The credit and rates layer has initial jobless claims, CFNAI flashing red. Gammon says the Fed is breaking things and credit spreads will blow out. The data disagrees with that thesis right now. Phase 1 holds with 76 basis points of buffer. Conditions favor risk, but do not get complacent. Wall Street trades the index. We trade the ground. Here is what the ZIP level data is screaming about today. MI, days on market, is spiking in Warren. Days on market in Warren moved plus 100% in 30 days, now 147 days. Buyer leverage score 5100. Days on market is the cleanest leading indicator we have. Big swings mean liquidity is changing fast. Days on market is spiking in Lincoln. Days on market in Lincoln moved plus 100% in 30 days, now 151 days. Buyer leverage score 56,100. Days on market is the cleanest leading indicator we have. Big swings mean liquidity is changing fast. Marin, CA, payment burden is past the breaking point. Point Reyes Station, CA, median home about $1,549,000 on about $79,000 household income. Price-to-income ratio, 19.6. When the math stops working, sellers find out before buyers do. These are not hand-picked metros. They are the loudest signals in the housing data right now, chosen by the numbers, not the narrative. Today's debate asked, is a volatility event coming, or is the VIX lying? Let me show you what happened the last time we were here. VIX at 21.5, the 66th percentile. Notable but not extreme. In 2022, bonds and tech both broke and the 60-40 portfolio had its worst year in decades. In 2020, the fastest bear market in history at 34% in 23 trading days. In 2018, markets dropped 20% in 3 months and the Fed was forced to pause. Different environments, different catalysts, but every time, the resolution came fast. The pattern is not the level, it is the speed of the move once it starts. Meanwhile, the move index at 77 is in the 54th percentile. The last time both VIX and the move index were at these levels simultaneously, the resolution came within weeks. That is why the scoreboard matters. It tells you which speakers saw it coming and which ones missed it. If history rhymes, the volatility expert should be paying close attention because the clock is ticking on this pattern. Here's what the data says to do right now. Stay alert on VIX. It is surging 39.7% today. Fast moves demand attention. Avoid Phoenix at 41% payment burden. That is stretch territory. Watch 2-year yield. It surged 3% and nobody's talking about it. Every signal is live at analyze.builderslens.com. 7 speakers, 65 signals, 1 question every morning. Who is right? Subscribe and I will see you tomorrow morning. Who is right? Subscribe and I will see you tomorrow morning.